All right, good afternoon then, everyone, as we are at the beginning of another week of trading on Monday, the 22nd of April. We'll have a flick across the economic calendar, talk a little bit about last week as we look ahead to the coming week to see if there's any tradable opportunities anywhere for us this week. Pretty quiet start to the week on the economic calendar, nothing out of note today. Tomorrow, manufacturing PMIs out of Germany, not likely to shake global markets up too much, but can have an impact on the European related assets. But you're already selling off this morning. Ah, I'm not sure. It's really something to pay attention to too much, though. To be honest, I'm not sure that the ECB will take that into consideration too much when they come to their conclusion of whether to cut interest rates or not, to not cut interest rates, as to when they will actually go and cut them. So we'll keep an eye on that as we go through the week. But I don't think there's too much point in talking about too much of the German data. If I'm being honest, I think an ECB cut is on the way quicker than some of its other counterparts. So when that comes, seemingly May, I mean, they do get wage data out in May, so I think maybe the next meeting, certainly the next or the second meeting from now, I think, is the time in which they cut, which is far ahead of the US. So there's a bit of a diverging monetary policy on that, and I think rallies on euro dollar continue to get sold. Interesting comments from the Bank of England's deputy governor, Ramsden, on Friday, suggesting that now he's historically one of the more hawkish members of the MPC, but did suggest that the risks to prolonged heightened inflation have fallen, noting some looseness in the labour market, sort of confirming that interest rate cuts are on the way. Markets had initially predicted September, then to August. Is there a possibility for a May cut from the Bank of England? Sterling certainly moving like it on Friday and then again today. So I think with the US where they're at, cable continues to be a sell on rallies, or is a sell on rallies now. Anytime that pops higher, you can see it's got whacked over the course of Friday, got whacked over the course of today so far as well. So keep an eye on that. Any pops higher, you'd have to imagine, are probably worth a sell on sterling. The rest of FX pretty mixed across the board. Dollar yen's an interesting one, but we'll get on to that in a minute. The Dow Jones up higher. You do have Tesla, Meta, Alphabet earnings out over the course of this week. Microsoft as well was the other one, and obviously they are pretty big companies when it comes to the stock market. So let's see what they have to say for themselves over the course of this week, and that will likely decide where stocks end the week. But another thing we need to keep an eye on is these yields. I mean, the 2 yields pinned to this 5%. It keeps attacking this 5%. If that does break above higher, that should continue US dollar strength, and is certainly not likely to be positive for US stocks. 10-year yield back at the highs, and these are interesting starts to begin the week. They had big sell-offs, a bit of safe haven flows on kind of Thursday night, Friday morning of last week, and they reversed all those gains and now back higher, reversed all those losses in the yield side of things. But obviously you don't trade the yield, you trade the bond. That's obviously the flip side when it comes to that. These sustained higher levels in yields weighing on gold, which has kind of been my thesis for a while. It hasn't proved fruitful as of yet, and of course when it does randomly move lower, you're not a part of it. But anyway, Middle Eastern tensions kind of subsiding over the weekend. There's no retaliation from Iran over the weekend. No fresh drivers there. Even Tehran kind of putting or playing down prospects of another Israeli attack over the weekend. So kind of blowing cold water on that. Maybe a bit of a downside off the back of that for gold, with yields up where they are at. Does gold? I mean, I've wanted to sell gold for a while, and it's up at these highs. Certainly in price discovery mode up at these highs. Doesn't want to hold on to them. Doesn't look like it for now. So let's see if we can break through these kind of lows down here, kind of 23.20. If we get below that, I do see scope for a further move down if we can't get past that. But that's certainly a barrier for now. Maybe it's somewhat prudent to keep your money in your pockets until we get that as backing against that trend, and state back or central bank backed buying of gold is certainly not the most profitable strategies, or has been over the course of this year so far. Apart from that, you do have the BOJ on Friday. You've got some Aussie inflation on Wednesday morning, Tuesday night, Wednesday morning. Then the Fed's preferred metric of inflation on Friday. The Bank of Japan, with dollar yen up at the prices it is at, it is up close to that 154 level, 154.80. Haven't quite reached 155, but a number of market participants seem to think that 155 level is an intervention level for the Bank of Japan. Now, if we are at that level, you'd have to imagine it would probably be relatively prudent for them to go and at least try and jawbone a little bit and try and prop up the price of the currency. They could do that by talking about interest rates to come. Or interest rate cuts, or interest rate hikes. I'm so used to saying the word cut at the minute, but so I mean, they could go and kind of job on it to a certain extent and talk about interest rate hikes to come. That would likely cause strength within the Japanese yen, and that would be sort of intervention without them actually having to go and sell any dollar yen. So, I mean, even if they're not actually looking at hiking rates, they should probably come out and say they're going to at the next couple of meetings, and then I suppose that kind of may backtrack a little bit later on down the line, but that gives them a bit more breathing room in the short term. So, um, I think longs the Japanese yen, I mean, they have to be worth a percent risk into Friday morning. Then what do you pair it against? I mean, dollar yen, sorry, would be the obvious one, but this inflation print from Australia. Now, interest rates in Australia are lower than the majority of the rest of the G8, right? If inflation comes back in below 3.4%, it comes back in towards that 3% level. Inflation in China was extremely poor over the month of March. Maybe this is something we can keep an eye on. If you do get weak levels of Aussie employment, or Aussie inflation, should I say, shorts on Aussie yen into Friday with a bit of risk to equity markets at the moment, with yields where they're at. Do earnings disappoint this week? It could be a good trade short on Aussie yen. We do need a couple of more things to materialize, but if Aussie inflation came in negative, you get a couple of negative earnings reports from the US over the course of this week, then that is something that is definitely worth keeping an eye on. But stocks still downside for the moment. Bit of upside to start the day. It'd be interesting to see how the US fire up at 2:30. Last week, repeatedly, we would see kind of chops over the morning session, and then the US would come in cash trading and then push it lower. So let's see if that continues over the course of this week. But sort of a failure to create a new lower low on Friday. Maybe a bit of positivity when it comes to kind of shorter term timeframes, but not really the same with the Nasdaq, is it? The Dow Jones up through the roof at the moment. Aggressive move on Friday, not really being replicated across the rest of the stock indexes. The FTSE though having a good time at the minute. If you look back on a weekly chart, we are at pretty let's go back where we can see a bit of a better chart. One who wants to go back at 27. Where do I get? Yeah, only wants to go back 2014, 15. I don't know why none of these charts. I used to have one that went back ages, but there we go. Right, you are at pretty much all-time highs on the FTSE. This only wants to go back to 2009, but anyways, we can go and breach these, up through here. Looking to be on for a record close at the minute was the article that I was reading. So if it close at this price, that would be a record close. Does still need to get a little bit higher to reach fresh all-time highs, but pretty dovish comments from the Bank of England on Friday, or the deputy governor of the Bank of England. Kind of opens up the door to cuts potentially even as early as I was going to say March, or past March, but potentially even as early as May. Positive for the stock index, negative for the currency, and looks a good trade at the minute, doesn't it? If you can jump on board with it. But anyways, apart from that, it's kind of where we're looking at PCE later on in the week. We'll break that down once we get some more earnings releases out over the course of this week. So we'll update that one further. For now, sterling shorts, maybe an Aussie yen short of the back of this look like the best trades at the minute. Let's see how the rest of the things pan out. But ongoing US dollar strength, maybe a bit of Japanese yen strength, and sterling weakness is the name of the game this week, I think.